So right now, the market's rebounded pretty aggressively. Let's see, the market's factoring in normalisation of some sort of the economy, returns, and that provided, there was a really small window of opportunity in March where there's a bit of information vacuum, governments hadn't reacted yet. Central banks reacted, obviously by providing liquidity, etc. So there's a very small window of opportunity where pretty much a lot of the market went on sale. You know, big discounts, everything got thrown out. It was pretty much indiscriminate selling. So that window is so small until the governments reacted. So if you hadn't done some work there and had a go at a few new opportunities or doubled up on your favourites, etc., you missed a bit of it. So the market's sort of pricing that in today. We did have quite a bit of indiscriminate selling across the board, so good companies were thrown out with bad companies. But there is going to be, out of this, some longer term structural issues were brought to a head, right? So it's going to have to happen, it's going to happen quicker. So companies were forced to pull out their restructurings to set their business up for a sort of maybe a new paradigm. They thought they might have 5 years to get to somewhere. They had to do it in 3 months and work on a plan for the next 2 years. So when it comes to our positioning, the way we looked at it was, okay, it's always determined by the value, where we're seeing the valuation support, where we can make some money by buying things where the market's overly discounting the outcome. So we looked for some sectors or companies that had short-term problems, as in, you know, had a sudden stop in the economy, right? So consumption dropped pretty quickly in a lot of sectors. So we're looking at those sectors where the short-term headwinds, but the companies in those sectors were going to be the long-term winners. So they were still in a good sector, and that company had good management, decent balance sheet, but they also used the market dislocations as an opportunity to press their advantage. So there's a bit of that setting up in the portfolio, but then also, as I mentioned before, the indiscriminate selling was quite broad in a lot of the cyclicals, as you would expect. And that set itself up where you could buy things which had fallen 50% in the space of a couple of weeks. And you didn't have to be very heroic about any sort of normalisation for you to make a return on your investment on those.